Hi, this is Mike Maloney, and I was sitting at my house. I'm doing some charting. I came across something that, I was reading a few articles, and I went to the Federal Reserve's website and did some of my own charting on this. You may have seen some other things that were similar, but I just wanted to show you what's going on right now and why the economy is the way it is. Um, I have been traveling the world for several years, and ever since the 2008 crisis, I've been telling audiences that that crisis never ended, that the Federal Reserve is doing extreme emergency maneuvers that show that there's still something very, very wrong with the world economy. And right now, the entire economy really is on artificial life support. Now, they've talked about pulling the plug, and that's the tapering that they have been doing. So I'm going to show you these charts here. This first one is, I just made these on the Fed's website. And this is the blue line is the Wilshire 5000 index, which is 5,000 of the largest companies in America. So this really is a picture of the stock market. The green line is the Fed funds rate, so it's what sort of dictates short-term interest rates. And the red line is base currency, so it's the amount of base currency is either cash that is in circulation or in the banks, or it's deposits that are at the Federal Reserve that the banks have, the commercial banks have accounts at the Federal Reserve, and they have this base currency on deposit, which they can withdraw at any time in paper dollars. So basically, this is a measurement of how many paper dollars exist or potential paper dollars. They just haven't put the ink on the paper yet. And what you see here is this amazing correlation between, I've seen other people do this with the S&P 500, but the correlation is not as good as when you're doing a much broader and more important measurement of the entire stock market. This is 5,000 companies instead of 500, so the sample is 10 times larger, and the correlation is absolutely staggering. But what you see here too, the gray lines, the vertical lines, represent recessions, and every 2 to 9 years there is a recession, and we are already 5 years in to this recovery, supposed recovery, and we're still in all of these emergency maneuvers. If the economy was okay, if it wasn't deathly ill right now, they would have ended this in 2010 and the economy would have gone along on its own and the markets. But by keeping interest rates down at zero and creating an extra, there was only 825 billion, or 0.8 trillion, we'll call it, of base money before the crisis of '08, and now they added about close to 3.5 trillion. It's 3.4 trillion. So we're up at 4.2 trillion here of base money, and I'm going to zoom in on this a little bit now so that you can see the correlation a little bit better between base currency. I'm sorry, I called it base money there. It's not money, it's currency. Watch episode 1 of Hidden Secrets of Money if you disagree, or if you haven't heard yet that the US dollar is not money. But here you see the interest rate being down at zero. This is very dangerous. What they've done here is destroyed something called the price discovery mechanism. The currency is 50% of every transaction. The cost of currency is called the interest rate. If you take the cost down to zero, that's a manipulation where you're not allowing the free market to set interest rates. You're trying to force something in the economy by putting interest rates at zero. Now, it mostly affects sectors of the economy that do a lot of borrowing, like, for instance, real estate. Now, there are only two ways that the Federal Reserve can influence the economy. One is by creating base currency, And what they do is they buy assets from the bank that are on the bank's balance sheets, and they push this currency onto the bank's balance sheets. The other is by taking interest rates down artificially. By doing that, that encourages the banks to create more currency through fractional reserve lending. So the Fed has a two-sided hammer, and everything in society is a nail. And their only answers are either to create currency directly or try and get the banks to do it for them. That's their only tools. And what you see here is that interest rates have been at zero since 2008, and we have not had this strong, robust recovery. And this is still emergency life support that's going on. And then you see this amazing correlation with base money and the stock market. So base money is propping up the stock market. These interest rates down at zero are propping up the rest of the economy. I'm going to zoom in on it a little bit more, and you can get a real good look at that correlation. This is entirely a phony economy, completely fabricated by the Federal Reserve. And what you'll notice here, if you look at 2013, you can see that that red line of base money is rising at a certain trajectory, a certain angle. And then when you get to 2014, it starts to level off a little bit, and that's the tapering. The quantitative easing tapering means they're creating less currency. But look at how the stock market has reacted. It's starting to diverge from this. Now, this correlation between these two lines is a factor of 0.97. A factor of 1 means that the lines are going exactly the same direction at exactly the same time. A correlation of 0 would mean that they go exactly the opposite directions at exactly the same time. A correlation of 0.97 means that 97% of the time, these two lines are doing the same thing, and only 3% of the time are they doing the opposite. That means that this is a completely fabricated economy. And the thing is that the free market can't be cheated. These people that think that they can manipulate the economy, that have the arrogance and audacity to think that they are smarter than the free market and that they can control this thing, they are leading us down a path that will be the end of America as you know it. And the world economy is going to change very dramatically someday soon. How soon? I don't know. The markets did start to roll over and diverge from this. There's a Fed meeting at the end of this month. One Fed official has already come out and said that there's a possibility they may not end QE. With the markets rolling over like this, I think that there's a good probability that they're going to continue QE, and that means that there will be a party on Wall Street, and the markets will start rising again, but that will just make the problem worse. When you do something like this to the free market, this is building up energy, and that energy will be released one day. The market will correct itself, and the crash is going to be horrific. And if they've already taken interest rates to 0, and they've already created 3.2 trillion of extra currency on top of the original 0.8, then what can they do the next time? They can't go below 0 here. So that means that the choice left is to create 10 trillion, 20 trillion. I don't know, but it's going to take a whole lot more than just the 3.2 that they've created so far to get the same effect and get the economy to go back up. So what this means, I believe, is that the wealth transfer that I've been talking about for years is getting closer and closer. And hopefully, if the entire world financial system doesn't collapse, if we don't end up in some financial nuclear winter, if currencies survive and the markets survive, then I believe there's going to be a huge wealth transfer from the people that hold dollar-denominated assets like stocks and bonds and hold cash to the owners of precious metals, to the people that have gold and silver. And so this is basically what I've been getting prepared for years. But I wanted to put a face on this. I keep on talking about these emergency maneuvers that the Fed is doing, that they haven't stopped them. So I wanted to show you what that looks like. And this is a picture of what it looks like. Hopefully we can all benefit from this. But it is something to be afraid of. So thank you very much for listening, and we'll see you next time.